Hello, everyone. This is Jordan. This video is being recorded on the late evening of Tuesday, August 6th, 2024. Thank you so much for joining me. In this video, I am going to talk about the 5 charts that us gold investors need to be following right now. And these charts are based on the fact that there is a real risk, a rising risk, that we could be going into a recession over, now or over the next quarter or two. And that would mean the equity market, which declined, 8 or 9% recently. It recovered the last day or two. That would mean that there's more downside in the equity market. So this kind of environment, what are the gold charts, gold specific charts that we should be watching? I'm going to tell you my top 5. Let's get right into it. Okay, so first we have my favorite chart of all. I coined the term the most important chart in gold right now. And this is gold against a 60-40 investment portfolio. Gold against 60% stocks, 40% bonds. It's total return. You know the deal. And here we are. I should have done the thumbnail view right here, but here we are, where the last couple months, the ratio bounced at this support line, moved up a little bit, closed at 3.29. It did get a boost because of the contract rollover. This resistance is, call it 343. So we still don't have that breakout yet. And folks, that is, when you get that breakout, we're in a real new secular bull market. Because look at this move here. Same thing here. Gold outperforming in real terms. Gold outperforming again in real terms. And, I point out here 1972. That's really when it was confirmed in real terms. 2002 confirmation. So we don't have that confirmation yet. This is so important because if we see this move like that, we're going to see gold go to 4,000 or 5,000 in the next few years. That's what needs to happen for that move in gold to happen. So have to continue to watch this chart. I'll continue to update it every month. So that's number 1. Number 2 is 60% of gold against the 60-40. That's gold against the stock market. Now, gold has been outperforming bonds until very recently, but gold had crushed bonds in the last few years. But this is gold against the stock market. So it looks fairly similar to gold against the 60-40, although gold against the 60-40 is a little bit stronger. So gold against the S&P 500, again, so this is gold here. And this is where we're sitting, 0.50 or 0.51. That's major resistance. With the equity market weakness, rising recession fears, steepening yield curve, this is starting to move up in gold's favor. And I posted, this is kind of, I don't know if this is an inverse head and shoulders. I mean, it's not a perfect one. It's not 100% textbook, but I mention it. So we'll see if this plays out. And if this would play out, I mean, the measured upside target, would be around here. So this is definitely something to keep an eye on. Always have to watch this when the stock market's correcting, weakening, selling off, or when the economy is headed into a recession. And of course, when you see the market really take a dump, that's really the sign that the market is recognizing the economy is in a recession. So haven't quite seen that yet, but have to continue to keep an eye on this. Again, if you see an explosion above 0.50, that's the gateway to $3,000 gold and much higher. So that's number 2. Number 3, of course, is the yield curve. And this could be feeding into a lot of these charts. I have gold against the S&P here. I've talked about this several times recently. So these are the 2 yield curves I'm looking at. 2s and 10s, the most conventional, 2s and 30s, which in the last few cycles, this yield spread led that one. What I mean by led is this, here, this I think started steepening before this one did. And we can see this has already gotten into positive territory. Again, this is the 2s and the 30s. So it's already in positive territory. 0 point, this is getting really close. So this looks like it's probably going to go soon. So you have to watch this because if we get a strong move like that over the next, 3, 6, 9 months, same thing would happen here. You get that kind of move, that's really, really bullish for gold and precious metals. And again, that's what history shows us. Here's gold against the S&P back here. So this is 2000, 2007, almost. I mean, this was a teeny bit inverted, but we can see the steepening That's what causes gold to outperform the S&P 500. So this steepening, if this continues, that could lead into the last chart breaking above that resistance at 0.51. Now, I just want to point out, because you had a recession here, you had a recession here, and even at these points, you know, gold didn't. I mean, gold's in a secular bear market, but even at these points, it went sideways here. Okay, it declined here. It could have marked here, and also 98. So you look at this, and this right here, or this right here. Gold during those steep or potential steepenings, or near recession triggers, gold did okay. Now, 80s and 90s, of course, the overriding theme, gold was in a secular bear because positive real interest rates. You had really strong real interest rates. So you had 3, 4, 5% inflation, but you had 5, 6, 7% interest rates, or 5% interest rates when inflation was 2 or 3. So there was no need for gold. I mean, it hasn't been like it's been the last 25 years. But anyway, I'm droning on here. Let's get to number 4. Okay, number 4 is silver. I mean, we could talk about the gold silver ratio, but here's why I'm looking at silver by itself. Because as Vince Lancy and I, in our last interview, said, silver is often the tell for gold. And there have been some major bottoms in the precious metal sector when silver and gold are both going up and they're both doing well, and the miners are doing as well. They're doing well as well, I should say. But then silver is still underperforming gold. So what I'm pointing out is there's still going to be a positive environment for gold in gold stocks. The miners are going up, silver's going up too, but silver's underperforming gold. So that's why I'm looking at silver just in nominal terms, not in real terms. And technically, this could be a double top here. I mean, you can't always go by looks, as I was once told, but this doesn't look that great, kind of a double top. But as I mentioned in the interview with Goldie, silver's already gone from 32 to 26. I mean, could it come down here and you get a false break and maybe it goes to 24 or 25 before it goes back up? That's possible, but we've already seen a lot of damage in silver from nearly 33 down to 26. So how much more damage is there going to be? That doesn't mean silver's going to bottom here and then go like that. It's possible, but after this damage, it'll probably need some time. But anyway, my point is, this is the 4th chart. Just watch silver by itself in nominal terms. When we start to see silver bottom and strengthen and perform well, that's a good sign for the entire sector. But that's why silver is a key indicator, because any good move in precious metals really has to include silver. And again, that doesn't necessarily mean silver will outperform gold right away. Okay, so that's 4. Let's get to the last one. So this is a ratio chart. So just looking at gold stocks against gold, looking at GDX against gold, because GDX is the biggest, that's the most liquid. So people who really don't care about gold stocks, but they want to buy gold stocks, they'll buy GDX. And I pointed this out a couple of weeks ago, how great this was, nearly a 52-week high, breakout of this downtrend. Of course I got whipsawed, but nevertheless, again, when it looks like the sector has not just bottomed, but when the sector is really turning again and more money is coming back to it, you're going to see gold stocks outperforming gold. So for me, this is a more important ratio than silver against gold. That's why I'm looking at this ratio and silver just by itself. And a lot of bottoms, I don't think we're going to see a crash bottom, but if you look at a lot of these bottoms, I mean, this was October 2008, this was March 2020. This is a little bit different because precious metals did kind of go sideways for 6 months. But you look at some of these big sell-offs, gold stocks, they bottomed at the same time as gold, and they started outperforming right away just because they got so damn oversold. Keep an eye on GDX against gold. Those are the 5 charts that you should be watching as we go into this uncertain period where recession looks like it's coming, probably a bear market in the S&P. So got to keep an eye on these 5 charts. I'll keep everyone posted. Thank you so much for tuning in. Let me know what you think in the comments. Is there a chart I'm missing or a chart that you guys are watching? Let me know in the comments. Thank you so much. I'll talk to you guys again in the next video.